Joining us now is Jefferies chief market strategist, David Zervos. David, always great to have you on a day like today. I mean, the fact that the S&P ended at 4372, basically flat with where we started the day, even as we did see Treasury yields jump higher in the midst of all of the commentary from Powell, your takeaway?
Yeah, Morgan, we got a power flattener. The front end was definitely under pressure, and then it seemed to come back to just a moderate flattener. So I think that's the story in rates. And vol lower, equities unchanged. Jay really delivering, I think, the message that most people thought he was going to deliver. I think some people might have held out hope for a little bit more dovishness, a little bit more kind of, hey, we got this inflation under control. But that's not what he said. He basically did a little self-deprecating, to be honest with you. He said, look, we're not really good at forecasting inflation. We messed it up before, and that's why we're a little worried, and that's why we think we've got to have some insurance out there that we go again. And I think that kept a little cap on the market.
Yeah.
Even though the pause is nice.
Yeah, and I think that sort of, it came up quite a bit, actually, in the press conference, this idea of why pause if so hawkish and so concerned about the stickiness of inflation?
Yeah, I think that's right. I think the folks that were questioning him were like, well, look, you've done a good job. Why not kind of declare victory? And I think he's scared of what's happened in the last year or year and a half with inflation, and rightfully so. We've had a spike to 9.1%. We're down all the way 510 basis points to 4% in CPI now. It's good news. But, Morgan, I think one of the more interesting nuances of all of this was Jay talking more about how difficult it might be to get inflation, core inflation, down to where they want it to by the end of the year. And I think that keeps these rate hikes a lot more alive than people think. I mean, we've got to go from 4.5 core PCE to 3.9, and we've been trending the other way for a couple months. So, and upgraded the strength of the economy, right? So the markets, it's kind of hard to say you want to sort of call this the perma pause. I think that's a really hard one to get.
Yeah, I mean, to go off of that, David, it's tempting often to think that the reaction in the 2 hours, after we get the decision is the reaction. But sometimes it takes longer to play out. And I can't help but notice the KRE Regional Banks Index closed near the lows, down almost 3%. Does that perhaps indicate that there are some like you who think, yeah, hikes will continue and the pressure is still on?
Well, I don't claim to be any better at forecasting inflation than anybody else. I think we're all awful at it. But what I think Jay did tell you is that the most likely path is that it's going to be a little trickier to get this inflation down. And even if we go 60 basis points lower in core inflation, they're still hiking twice. So we might have to go 120 basis points lower in core inflation by the end of the year for them to pause. I'm not sure the market really appreciated what he was saying. We need to see low threes on core just for them to pause. I think that's an interesting, slightly more hawkish take on what is necessary here. That said, it's a positive upgrade to the economy. They're talking about a softer landing. And I think the market's going to weigh off both of them.